Nick, I want to start with you. We've been talking backstage about your plans for the region, about the partnership that you just started with Modon, Bill here from Modon as well. Something that you picked up quite a bit on is luxury in the region and luxury in the UAE particularly, and your plans to bring in real luxury. Can you sort of elaborate a little bit on what that means and what are your real estate plans for Dubai, Abu Dhabi, wider UAE, wider region?
Okay. So luxury, in my opinion, is, let's break it down into two different parts. One is physical materials and one is service. If you have a Four Seasons hotel, but the residences are 2 miles down the way, and the Four Seasons are not servicing it properly, that's not luxury. So all these branded residences that don't have service is not luxury. Okay, luxury is when they're fully integrated, when if you want your sashimi, your hamburger, your housekeeping, your massage, it's next to you, it's immediate. So that's the first thing. And then the actual product itself. So some people in the region are doing some very nice products, but in general, I think there's a long way to grow in terms of what the product offering is compared to other capital cities in the world.
Jad, moving on to you with Brookfield and some of the biggest transactions in the region lately. I want to know a little bit from you about some of the lessons that you've gathered from those transactions. So, we're talking about Miras, GEMS, ICD, Brookfield network. What lessons have you learned from those deals and transactions that you've been part of, that Brookfield has been part of?
Sure. So, look, for everyone's benefit, Brookfield now has about $13 billion of assets under management in the Middle East region alone, of which $3.5 billion of those are in real estate. Roughly $8 billion are through private equity investments and infrastructure investments. I would say the first learning that we had pretty early on was that we wanted to be alongside strong partners here in the region. And so we've always worked through a partnership model while we've been here, which is why you would have seen our first investment in the Middle East was in ICD Brookfield Place alongside the Sovereign Wealth Fund of Dubai. We've invested alongside Dubai Holdings and Miras in a number of retail assets here in the city. On the infrastructure side, we're partnered with ADNOC. On the private equity side, we're partnered with FAB, Mubadala, ADQ, Ulayyan, as well as the Varki family when it comes to GEMS education. And that's been a great model for us because I think there's a lot of operational expertise that we can bring in, and then there's a lot of, I would say, more fine-tuned nuances which are very well covered when you have a strong regional partner. The second thing that we've learned is that scalable transactions are there. There seems to have been this perception that in the Middle East, M&A was only really for smaller transactions, and I think we found that that's not the case. Actually, the reason that maybe we didn't see larger transactions is because there weren't many people globally who had the appetite to do large transactions here. Which brings me to my third point, which is in order to be investing in a large scale here in the region, you need an investment committee that trusts the team on the ground, but also that understands the nuances of the region and understands that the GCC is a completely different, let's say, part of the Middle East than the larger geographies that are there.
Just to pick up on your point about the GCC and the countries in the region, we cover the sort of powerhouses coming to Dubai and Abu Dhabi, particularly in terms of bankers, hedge funds, asset managers, and we've seen a boom of that over the past year, couple of years. So in terms of geographies, do you think that the UAE is saturated in terms of what you're looking for? Do you think that you may tilt your attention towards neighboring countries like Saudi Arabia, Kuwait?
So look, our focus in the region has always been the GCC. It's never just been the UAE. It just so happens that the right transactions we found over the last 6-7 years have been in the UAE. But even then, if you look at some of our portfolio companies like Network International, Magnati, GEMS, those are all regional champions that we're going to grow eventually throughout the region. So Saudi will become a bigger focus just because we think there's more transactions coming down that path. Probably more than there have been historically, also because they're trying to attract FDI in a major way. And the reason that we've always focused on the GCC is quite frankly because you benefit from emerging market growth, but with dollar-denominated currency. And that's not something that many places in the world have, outside of the US, naturally. And for a lot of capital around the world who might find that there's some benefits to a higher growth rate and want dollar exposure, that's when our part of the world, the GCC, starts to look very attractive. So it's only going to increase.
Bill, I want to talk a little bit about Egypt. And we know that Modon was just picked to be a master developer for a city in Ras Al Hikma, where the UAE earlier this year invested $35 billion. Can you talk to us a little bit about what those plans look like in Egypt?
Yep, certainly. So Ras Al Hikma is about 4 hours to the west of Cairo on the Mediterranean coast. Modon was appointed 2 weeks ago on the president of His Highness Sheikh Mohammed and President Sisi in Egypt as master developer of the full 170 million square meters of land. I think one thing that differentiates Ras Al Hikma a little bit from more traditional developments is that it is a city. The scale of the project, as per the master plan we've done, we're expecting that when it's fully built out, there'll be 2 million residents. So this will make it a really critical city along the Mediterranean basin and on the north coast of Egypt. I think what's important as well is our approach as a developer of a city and not a development is that we're very aware as a master developer that to deliver this project, we need to do it with partners. And I think at the launch, that was very evident. We had a lot of potential partners attend the event with us. We signed with several of them. 2 of them are sitting to my left, attended the inauguration of the master plan. And I think the scale of this development means that we need to have partners, and we'll be working very closely with them over the next 18 months to make the plans for delivering the project. But also, we need the partnerships in order to deliver the project quickly and to harness the stimulus impact of delivering this scale of project in Egypt.
Right. Nael, we were just talking about GFH sponsoring this session, so thank you for that. I want to talk a little bit about numbers, and I want to talk a little bit about your forward-looking strategy. So we know that GFH Partners just closed its 7th Logistics and Industrial Assets Fund in the US with a total of $300 million. There have been multi-million-dollar deals in the US as well. Would you say that your logistical focus is currently in the US, or are you looking at other regions?
For us, I mean, the U.S., because of its size, because of the attraction it carries to a lot of, particularly GCC investors, is and will continue to be the bigger chunk of the pie. However, we're increasingly deploying capital here in the region in the logistics sector, which we view as a cornerstone vertical or sector for us. So last year, we started with a deployment of about $300 million into logistics in the UAE and Saudi, and we are on the verge of doing a second fund of the same because we see opportunity in this sector in this part of the world. To Jad and points, we see a region that has a stable currency which attracts money. Right. We see a region that, compared to many other parts of the world, that is showing potential of economic growth that exceeds those. And we see a potential for the development of a new breed of assets and logistics which don't exist at this point in time. So for us, it's interesting times and one where we see ourselves over the course of the next 3 to 5 years deploying more and more capital into this part of the world.
Right, and again, just to allude to the point that was mentioned earlier about this region, particularly, talking about the UAE and Saudi Arabia attracting a lot of attention over the past few years. So in your positioning yourself locally, do you envision attracting investors, any interest in foreign capital?
In fact, to your point, we're doing that as we speak. So we are already attracting capital from parts of Europe. We're attracting capital from Asia to come in as part of our vehicles in this part of the world. One aspect is our structures appeal to the Sharia compliant investors, so that is an angle. But I think leaving that aside, I think the attraction of, as I said, stable currencies, stable economies, particularly in the UAE and Saudi, presenting a story of growth, which is kind of rare at this point in time on a global economic basis.
Right. Nick, I want to go back to you, and I want to go back to your plans in the region. So can you tell us a little bit about when we should start seeing the first project in the region, in the UAE? And then the second part of the question is, what other country in the region do you see as lucrative, somewhere you would like to base?
So in terms of, I've been working hard with our team for about almost 3 years now to do something extraordinary here in Dubai. I'm hoping that we'll be able to announce it in the next 4 weeks. So, but hopefully, without doubt, this side of Christmas. So it's very exciting. A lot of hard work's gone into it, and a lot of new brands will come to the region. On top of that, we're very committed with Modon to build uber luxury properties wherever they're going to be. So whether that's going to be in Abu Dhabi, whether that's going to be in Egypt, wherever they want us to go, we will go with them.
Right. And we were talking again about institutional capital coming in. And you were pointing out your thoughts about that. Can you elaborate a little bit about whether you think there's room or appetite for institutional capital coming into the UAE particularly?
I think institutional capital into the Middle East in general, into the Gulf region, will start to come in a massive way. Obviously, Brookfield came early. They did ICD Brookfield Place. That's an example of a super luxury commercial building that would look great in either Hong Kong, Singapore, London, New York. It'd probably beat most of those buildings in Hong Kong, London, and New York, actually. So in terms of institutional capital, I'm a big believer that the institutional capital will come in scale to especially the UAE, but the Gulf in general. So, but that, you have to allow that a lot of the land bank of these, in some of these countries, is controlled by government entities or royal families. So they'll have to free some of that up to do it. But if you look what Brookfield have done, I think with the right partner, they'll do that. The second thing is, in terms of high-end residential, a lot of people, if you've lived here for a long time and you've seen the cycles, get a bit concerned that, oh, is it going to crash again? Dubai on a global scale is super cheap for high-end luxury. And I think it's got at least 3 times, so 300% growth in it in the next 5 to 10 years. I'm a massive believer in it, and I'm going to put my money where my mouth is.
So those numbers are, quite meaningful. And this question may sound a little bit intuitive, but why do you think there's so much appetite in this part of in this country?
I think it's a number of reasons, and I've spoken about it openly in the media before. I think in the West, the values that I once grew up with are being destroyed. Wokeness, cancel culture, crime, high taxation, poor infrastructure. There's a list, and a long list. And it's not just the UK, it's France, it's Germany, it's the USA. And I don't personally want my kids to be taught transgender ideology at school. And I don't think most people in this room would want that either. So I don't want, worry about knife crime. And in London, we've got it as an epidemic. So, and you've got a low taxation environment here, you've got incredible infrastructure, you've got incredible lifestyle. The ruler of Dubai and the president of the UAE have done an incredible job on making it a place for families to come to and have an incredible life. So so the destruction of the West is a big thing, but also the positives of the environment they've created here.
Jad, bearing in mind the reasons that Nick just mentioned about why the region carries a lot of appetite for expats coming in and for foreigners putting in their money here, and bearing in mind the fact that Brookfield is one of the largest investors in real estate, do you think that this move is sustainable?
Yeah, absolutely. So I'll add one point to the statistics that Nick was talking about, which is if you look at Dubai's debt to GDP, it's gone down 20 percentage points. So it used to be 70-something% of GDP, and now it's 50. And that's in 2 years. And I think people, the first thing you learn in finance is that historical trends do not forecast future trends. And if I look at what that means today, in no point, I think, in history have we seen this much demand for real estate here. Now, when I say real estate, I don't just mean residential. It's across the board. If we look at our prime office in here, which is in the DIFC, it's 100% leased. If I look at our prime retail, which we have a joint venture with Dubai Holdings on, whatever is up and running is 100% leased. And these were at maybe 50% leased 4 years ago. So what I'm getting at is that in order for it not to be sustainable, there needs to be financial pressure somewhere. And right now, there isn't any financial pressure anywhere. Even if you look at the majority of supply coming on, to what Nick was saying, it's at all different levels of quality, and it's in a lot of different locations. And I think the one thing that we have seen in the UAE is that micro locations are now becoming their own sort of ecosystem. You can't look at, before prices went up, prices went down altogether. Now it depends on where you are. For example, if you're looking at developing hospitality, there is a significant advantage to doing that on the beach versus not being on the beach. And so if we're long-term investors and we're looking at, okay, riding out these cycles, it is by far more advantageous to be buying something on the beach. And so we'll continue to look at those more nuanced trends throughout the markets here.
So let's say for the medium term, you see an acceleration still in both office spaces and housing.
Yes, because vacancy rates are low. Okay. There's no option. Look, remember, at the end of the day, there are many countries in this world that produce more educated graduates than jobs are available. And there are very few countries in this world that produce more jobs than what its current supply of talent can fill, which basically means that we have a constant requirement for talented professionals or whatever it might be in terms of workers to come into the country, which means you have a constant requirement of increasing capacity of supply that is required. As long as safety, security, and economics come first, there's nothing that should trouble that balance.
Right. Bill, I was driving to Abu Dhabi the other week, and on the way on Sheikh Zayed Road across from Dubai to Abu Dhabi, you see a lot of Modon billboards. And I think Dubai takes a lot of attention when we speak about housing and the acceleration in rental prices and luxury housing. But, Abu Dhabi is also attracting a lot of these big financiers. ADGM is always, as far as I can tell, filled with people. Do you have, can you talk to us a little bit about your plans in Abu Dhabi? Are there any projects underway, any projects coming up anytime soon?
Yeah, I think we are seeing a similar demand in Abu Dhabi in terms of growth over the last years. And I think that one thing that Abu Dhabi has done very successfully is diversify the offering from where it was perhaps 10 years ago. And that's been a success story for all of the developers, whether that be Aldar, lead development on Jubail Island, Modon with Hudayriyat, which we launched earlier this year. We launched about 400 hectares of the master plan, and the master plan is 5,500 hectares. So we have a long ways to go just on the Hudayriyat project. We have another launch coming up this week. And we're seeing a really, really solid demand. Our first launch sold out in a week, and we did the launch during Ramadan, which we were strongly advised that we shouldn't do because most real estate developers don't launch during Ramadan, but it was actually a tremendous success. And I think it's a reflection of the level of interest there is in Abu Dhabi. I think when you say there's always the story of Abu Dhabi versus Dubai, and we really don't see it as a competition. We see that Abu Dhabi and Dubai completely complement each other. There are very, very few places in the world where you get two powerhouses like Dubai and Abu Dhabi with the proximity that we have. They're just 1 hour away from each other. So the Dubai residents can benefit from all of the offering of Abu Dhabi, and Abu Dhabi residents can benefit from all of the offering of Dubai. We're also seeing a lot of migration of our workforce that historically may have lived in Dubai and worked in Abu Dhabi, particularly families that are now moving, making the transition and moving to Abu Dhabi. And that's, I think, a reflection of the lifestyle and offering improvement that's come in Abu Dhabi as well over the last years.
Right. And I want to start talking about risks, and I'm going to ask this question to everyone, but I want to start with you. Granted, everything we hear about the real estate sector right now in the UAE is, it's different from when we spoke about real estate back in 2007, 2008, the bubble, whether this is going to happen again or not, but there are risks. I mean, one of the main things we're looking at is the US elections in a few weeks' time, and particularly the impact on US interest rates. Now, we've already seen a 50 basis point cut, and we're expecting another cumulative 50 basis point cut for the remainder of the year. What is the impact of that on the property sector in the UAE?
I think there's kind of, in our opinion, there are two direct impacts. The first one is obviously interest rates. So that, by definition, in a lower interest rate cycle, demand for prices of real estate will definitely increase. And that's the direct impact. Now, the question for us as allocators of capital or managers of capital is to what extent interest rates will come down and how fast, because that will affect the amount of returns you will make over the course of the next 12, 24 months. But the other impact is also the impact on energy prices, because the potential swing between one party versus the other has an impact on their policies towards production of oil in the US, and what that will have in terms of impact on price of oil, which in turn will have an impact in terms of governmental spending and availability of liquidity. That is a risk, in our opinion, not a huge one, but that is a risk. I think the interest rate probably more in the side of being an enabler or a facilitator of greater investment deployment of real estate as opposed to the first one.
So that's not a huge risk. What would you say is the biggest risk facing the business right now?
I think the elephant in the room is the geopolitics. Any ramifications, any further negative ramifications of what is currently going on could potentially be a risk, because it could deter quantum of deployment. It could deter. You asked about foreign capital coming in. It could deter investors from opting to deploy locally and opt to deploy outside the region, or reduce how much they're deploying. So that is a risk. Again, hopefully, and as we see, there isn't much of an impact so far, but that is a risk.
Right. And just going back across, the panel to speak about the biggest risks. Nick, you're just coming in. There's a lot of interest in the region. What would deter you from investing? Just to pick back on what Nael was saying about risks. Is it the geopolitics, interest rates? Is there another thing that you're looking at that would make you think, okay, maybe I need to take a step back?
Well, I've been coming here for 20 years, and I was offered opportunities 20 years ago, which I should have taken. But at the moment, there's not one thing that I can see which would stop me coming here. And you're seeing it already. In the UK, we have a budget at the end of the month, and there was rumors about non-DOMs and taxing and all this sort of stuff. I'm not non-DOM, just to be clear. I'm resident UK at the moment. But loads of people are leaving already. And the biggest place they're leaving to is not Monaco or Switzerland or the Channel Islands or Milano. The biggest place they're leaving to is the UAE. And as long as safety, security, and the economy, as Chad mentioned, they're all equally important, then I can see it just continue to grow.
Right.
And the infrastructure is amazing. I mean, you go on a British Airways plane versus an Emirates or Etihad, it's like life-changing.
Jad, the geopolitical tensions, the regional volatility, is that something that you discuss as, and again, as Nael mentioned, we talk to a lot of people, and a lot of the people in the region say, you know what, we're not feeling the impact on the GCC yet. But is that something that you foresee as, a negative impact if the regional instability were to continue?
Look, the GCC, again, I'm going to focus on the GCC only because that's where our investments are at the end of the day. The GCC doesn't have a history of security volatility at all. Through how many wars in the region? So is it a discussion? I wouldn't call it a discussion. I think it's an education. And it's an education to a lot of investors globally, not locally. But people are starting to catch on that there is a difference between it all. And and the UAE and all the GCC has always been very clear about focusing on safety, security, and economics. As long as we stick to that, I'm also of the opinion that I don't see anything getting in the way here. Maybe there will be different rates of growth, and that's okay, that's healthy. But it's not a drop, and it's not a sustained drop.
Right. And Bill, in terms of what you do, what do you think of as the biggest risk to your business model?
Look, at first I would just take the opportunity to kind of second what Nick and Jad said. I think that there is a history of security and stability here that, not to be naive to the situation, but on the contrary, while things are more turbulent around us, it actually makes this place more apparent as a safe haven, and a safe haven that has stood the test of a lot of challenges over the years. So while we acknowledge what's happening around us, we don't really see it as a direct risk, and on the contrary, could drive demand to the UAE and to Abu Dhabi and Dubai. I think as a developer on the delivery side, and this is, when I started speaking, I spoke about partnership. I think resources and high quality, qualified resources, particularly around construction, is something that we really need to see an investment in. The contracting capability has grown significantly in Abu Dhabi over the last 10 years. And to deliver our plans, we see that needs to grow further. I think that's across the trades, supply of material, and contracting itself. So if there was one sector that we feel needs to have some investment in it and to grow, to keep up with the level of development, it would be the contracting sector.
So do you think, right now we've moved away in the UAE from a sort of boom and bust cycle?
We would like to think so, certainly. And, again, I think as we become internationally recognized as a place for investment, people will also recognize that there is tremendous value here.
Right.
I think when you compare, Nick mentioned comparing Dubai to other major capital economic centers in the world, we see that there's value. Abu Dhabi is demonstrating value compared to Dubai. So we know there's a tremendous opportunity there for demand to grow. And there is an investment story for us to give to the people that are coming. And it's not just about foreign investors coming and taking up real estate as well. What we're also seeing is a big increase in the amount of mortgage buyers. So previously we had a lot of cash buyers, you had a lot of speculative real estate investors that were coming into the market. And we're now seeing a big growth on mortgage buyers and people who are working here moving away from rented accommodation and buying their own accommodation. And that's something we see as well as a big
What would you say the
factor.
ratio is right now in terms of mortgage buyers versus cash buyers?
It's probably we're approaching on our portfolio about 50-50
Okay.
now, which was never the case in the past.
All right. We only have a couple of minutes left, but I want to, before I end with the last question to all of you, I want to just ask Nick and Jad about this thing that us journalists like to ask people about, especially us covering the region, which is, again, in terms of geographies, we talk about the competition between Saudi Arabia and the UAE. We talk about Dubai versus Riyadh. Is that something that you take into account at all when you're sort of pursuing your business needs? Perhaps starting with you, Nick.
The question is on competition between UAE
Competition
and Saudi.
between the UAE, Saudi, and if that's something you look into at all, or if you see it as an opportunity to base.
In Europe, we have London, Paris, Barcelona. You know, like, why wouldn't you have the same in the Gulf?
Jad?
Vacancy rates are low across the board. So everyone's doing great, and everyone's going to continue to do great. Everyone has different business reasons for why you want to be there, or different economic reasons for why you want to be there. And I think they'll both be exceptionally successful. And by the way, they have been for the last 50 years. This isn't, you know, this isn't news, really.
And the last question, only because I ran into the UAE's AI minister this morning, and it's been a hot topic everywhere I go in every conference. And so a question to all of you briefly, if you're, you know, incorporating any of the, you know, AI tech that we're seeing, is that anything that you're taking into account into your business model? Maybe starting with you, Nael.
It's, I think we're starting to see it in every facet of our work, from the smallest things, from having an AI app that takes notes during meetings, which is, you know, mind-boggling how that is done in any language, in any context, to analytical tools, to basically database reviews. It's, you know, again, it hasn't yet, we cannot say that in our line of work it has replaced jobs or what have you, but it has certainly been a facilitator and a tool that I think over by the speed by which we have seen it over the next few years, it will be an even better tool for jobs.
Bill, how is it? How does it work?
Yeah, similarly, I think we're seeing that we're implementing that across the corporate spectrum, from everything how we operate as a business, data analysis of how we capture data and analyze it for our customers, building apps now so that how our customers can engage with us as well. And again, I think the same thing. We're not seeing it as a threat to jobs yet, but an enhancer of the level of quality of data information that we have and level of service that we can provide to our customers.
So not a threat to jobs yet.
Not so far.
Jad, what about you?
Look, AI is important, and it's going to be transformational, but I think the data that powers it is more important. And the question is, what data are you going to have available to power those decisions? And that's a much larger question.
Nick?
And I'll answer it slightly differently. In the high-end residential space, service charges have been a big detraction from people purchasing expensive apartments because the service charges are so high. So one of the things I'm doing at the moment with our team is looking at how we can use AI, robotics. Why do we need a window cleaner when a drone can clean it with a robot on it, and that data can be passed back when it's last cleaned, etc. So we're being very specific about how we use it.
All right. Well, Nick, Jad, Bill, Nael, thank you so much for your time, and thank you all for joining us in this session.
Thank you.
Thank you.